Hello and welcome to Stocks Advisor channel. Here at our channel, we are looking for interesting buy opportunities for US-based stocks. Today in our episode, we will talk about three stocks. It's Limelight Networks, Bandwidth, and EXP Holdings. Well, let's start from the first one, Limelight Networks stock. And this stock is actually intraday showing today an interesting candle, which is a piercer candle. And you can clearly see that this candle is actually kind of piercing two moving averages, almost moving average 20 and 50. Here, by the way, we have three moving averages depicted on the left. It's moving average 20, 50, and 200 being green, blue, and red line correspondingly. So why is this interesting? Seems like this wave, the last wave, is actually repeating. So this last wave is repeating the similar pattern we had in the previous wave. So it's like upwards move, then break, plateau, and small decline with recharge. Similarly, we see here, starting from beginning of October, actually we see upwards move, a decline, flattening, and seems like this piercer is showing us some kind of a recharge. So now the question is, what's the general interesting entry points for this stock where we can make our trade, and what's actually next nearest future from technical point of view for this stock? Well, for that, let's do a quick analysis. First of all, what is important to note here is that Limelight Networks is actually trading last 4-5 months in this flat channel. So let's first draw it. And then this channel actually is slightly moving towards another one. So this is the channel. Let's name it C1 C2 channel. And this channel last actually 2 months is slightly shifting to kind of elevating channel. If we would draw it, so it's this one. And this channel we can call actually, let's call it S1 S2 channel. So from C1 C2 to S1 S2, and now the question is, well, we have a piercer, so is it really going to break S1 S2 channel and return to C1 C2 channel, or we are going actually to reconfirm S1 S2? In both cases, it's in general, whatever would happen, it's actually opening interesting buy opportunities, because here both channels are going to kind of middle zone, and actually S2 channel is going to lower zone and C1, C2 channel is going to the middle zone. So for both channels, it's very nice entry points being open here. And if we look at those, the first support level is actually here for C1, C2 channel. And the next level, we can clearly see it's actually this one. And then if price would go further, it's not given it will go there, but just to, let's say, present it, it's here. So why is it interesting? Because if you look carefully, we have very well echeloned support lines here. So this would be then correspondingly S3, S4, and S5 lines. But what is also interesting here, that moving averages, especially the short ones, 20 and 50, are going to first accelerated mode, meaning that especially moving average 20, it's going like this. So it's not only it's going up, but also its first and second derivatives are going up, meaning it's going upwards with acceleration. Seemingly moving average 50 is also going to turn that way. So it's like trying an inflection point go upwards. And moving average 200 is also positive, so showing this pattern. And now these moving averages are starting to show so-called 20, 50 to 100 pattern, which if it keeps longer would mean the stable and strong growth with waves upwards. And then it might be the two waves that we already observed. So the one that started at the beginning of September, then ended at the beginning of October, and second one is actually kind of now in a recharge way, recharge point, might be actually the new waves of the new upcoming longer trend S2, which will be classical 20, 50 to 100 behavior. And with this, it's actually a very interesting point to look at, especially the last piercing moment where we see this candle is forming. The vicinity of this area actually present us like triple support line here. It's moving average 50, S3 level, and 200. Therefore, we would advise the first entry at this level. tomorrow if price goes piercing further. Then if we have any further action without immediate recharge to S1, S2 channel, and we will still keep in C1, C2 channel, then the next entry possibility will be here in between S4 and S5 lines. And whatever price goes further, if it happens, of course, very, let's say, not expected situation, the chance for that is very low, but if any, the price at C2 would be the last average down. And here we advise to average down and buy with rule 1-2, meaning like you buy with one portion, then you average down 2 times with 2 portions. Not given that we will have actually last circle, as I just said, but in both cases, the price could either immediately recover from the first circle, then it would mean we are indeed about to form S1, S2 upwards channel, and then price will go volatiling again at C1 as the final battle and actually going for second wave. Should the price go further towards second circle here, then most probably still will be indecisive about either we continue C1, C2 channel or we will go S1, S2. And then actually S1 line will be kind of either resist or volatility point, and from there we will still need to see how the stock will behave. But later we'll come, of course, back to this stock to analyze this situation and to see if the transition of the channels actually happened or it was just a fake call and just kind of a false piercing of C1. In both cases, it is, of course, short, mid and long-term consideration. In both cases, for shorter term, from 2 to 5 weeks, these 3 circles are very interesting, nice entry points. Therefore, if you like this analysis, put your orders on these levels, put your alerts on those levels. So once this works, you can enter and make your trade on Lifetime Networks. So with this, let's go to second stock of today, and this is the stock Bandwidth Incorporated, traded at Nasdaq, ticker name BAND. In contrary to previous stock, this one is actually already in so-called 20, 50, 200 conditions. So its moving averages 20, 50, and 200 are forming this line, and this means that stock is in general growth, just with waves. And indeed, we see these waves going and using moving average 20 here as a support line already starting from May, sometimes breaking the trend, for example, like it happened in July, and the trend was broken, and then moving average 50 here worked as additional support. Actually, here in this stock for last 6 months, we have so-called a parallel upwards move kind of chart, when the moving average 200 grows almost linearly, and the price of it follows it parallelly, almost using moving average 20 as a support line, therefore forming this upwards trend. And then the moving average 50 here works as actually additional support, also going in parallel. So we have like a parallel corridors here, parallel windows, and you can see that if you call this trend like T1, then this one would be T1 prime, and T1, let's say, twice prime. And that's very interesting because these kind of patterns, they're consistent until the level of breakage. And here we saw first breakage of this pattern that took place in July, about before 20s, like 15. But then moving average 50 was good enough to recover the trend. We saw again 2 waves, and then the wave was broken. Third wave was broken at the beginning of September, and again we saw decline. Again, moving average 50 here together with actually like T1 line, it worked as a support, but this time not as an immediate support, in contrary to the previous case of 15 of July. Here it took some time, almost 2 trading weeks, to reconfirm the trend, and then price went up again. Now what is happening, the last wave, which started classically from T1 prime line, so with from the classical upwards trend, it's not breaking actually like previously, but it's just slightly going down. But it's going down with two cascades, meaning like it goes up like this and then goes down classically, but then with second cascade. And this actually calls for some considerations about possible immediate return. Therefore, the first entry would be already at these levels, because if you look carefully here, the first support line where we're sitting together, actually, this way of forming a double support is exactly the current price as we speak, because it's support line together with T1 twice prime trend. So this would be the first entry point. And then if you look of another defense, let's say opportunities, so average down opportunities, we can just clearly see it's not hard for this stock. Another points of support, levels, of support. So this way you can clearly see like these are the levels, and if you would place your orders, actually we would advise this one to be the next level of average down, and then here it would be the third one. This way we can call these S1, S2, and S3 support lines. Again, since it's three supports and they are a little bit far from each other, we advise 1-2 approach. Again, you buy with one portion here, then in case you need, you average down 2 times. Often people ask us, well, price didn't go that low, we just rebounded from first circle. Why is that? Well, that's the reason why we call it support line, and of course, that's why we advise to buy at that point. So the levels we discuss in our stocks actually, that our kind of board of experts think of and prepare every day, it's not the price will go there, but it's just the levels where the major action could take place. Therefore, we discuss entries, and once you enter, you can return at the point even earlier than discussed. So you can not wait till S2, but just return can start at S1. And the return would start at S1, so if this level would work as double support, so T1 to primes and S1 will work double support, then we can actually rebound towards T1 prime line, and tomorrow we can, not tomorrow, but next week, we can start forming another wave. Should the price go a little bit further, and this is also the most probable situation, because if you look at RSI levels, and that's here where RSI is important for the stocks forming 20, 50 to 100 positions or patterns. RSI is actually going below middle, and this means that usually we break the trend. Because if you look for other waves, they were just in the middle. This is a classical indicator actually for stocks forming 20, 50 to 100 patterns. Always usually wave is reconfirming in the middle of RSI. Should RSI go further, this means a more general correction or breakage of the wave. Similarly, if you look MACD, actually histogram, it's now going in negative wave, which is positive in this case. So for MACD, it's vice versa. If it's going negative, it's a bullish sign, meaning it's developing actually pressure bullish momentum here, which can trigger any moment. So most probably the second circle S2 line will be the major rebounds, but you never know. So anyway, if price should rebound here, then probably we will not completely return to T1 prime, and T1 prime will work actually as temporarily resist here. So this segment, in this case, will work as a resist level. Then we will see how the price will play further. We will also come back to this stock later on to discuss its behavior and future. So this is it also for Band. And now we go to our final, last but not least stock. It's Volt Holdings, incorporated, traded at Nasdaq, ticker name EXPI. And here it's another so-called 20, 50, 200 stock, which forms this nice, steady, mid-long-term positive action for moving averages. And by the way, also as for another charts, moving averages are always depicted with three colors. It's green, blue, and red, being moving average 20, 50, and 200. So this is again so-called 20, 50, 200 stock, but it's not forming the parallel movement. It's forming kind of divergent movement, meaning like its moving averages are not going in parallel, but they are going far from each other. Especially this is the case for moving average 200. You can clearly see here that the distance between moving average 200 and other moving averages is increasing with time, which overall creates more and more kind of a vacuum to suck the price in for correction. And that's exactly what's now happening. You can clearly see that the last wave that started somewhere 20 at the end of September, it's a classical upwards wave, and now it's classical decline wave, but it has pierced moving average 20 here. which is also coinciding with its upwards trend. Let's call it T1. So it's being pierced, and now we most probably will see a further correction because price was of this wave being overbought at RSI, similarly for another waves as well. And also, as I said in the previous chart analysis as well, you can see that RSI-wise, we are now a little bit further than the middle, so most probably a further correction will take place. And the reason we sit at this line today, it's also because it's actually double support again, as in the previous stock. It's moving average 50, plus it's a top of previous wave. So if you look volume-wise, actually there are a lot of volumes to support these levels. And exactly that's what is happening now. So at these points, the most volumes was performed. So again, the rebalance might take already from these levels or lower. Therefore, we need to prepare ourselves for extra entries and extra average down. And then if you look for the levels here, it's a little bit more tricky, less strong supports, but still they are. And if you look on those, these would be the lines for EXPI. The lower you go, the more echeloned it becomes, but at higher levels, it still might show some strong volatility here. And let's call the lines, it would be then S1, S2, S3, S4, and S5 correspondingly. Therefore, we again advise entry here a little bit below than S2, so actually below than S1. Between S1 and S2 channel, that would be the first advised entry, and the second entry will be in the vicinity for S3 line, and then it's most probably the price will recover. Should it really go further, but this can happen only with some negative catalyst, then in the vicinity S4 would be the third entry. Again, here it's advised 1-2 strategy, meaning like you buy first with one portion, then you average down one and second and first times with two portions. And again, as usually happens, the first breakout usually recovers, so we can recover until T1 line. If we will start recovery sequence from lower levels, it might mean that T1 trend is actually being cancelled and we're starting something new. But to understand what it is, we need to come back to this stock later to see how it behaved, what was the analysis, the volumes, and maybe some catalysts and some real, let's say, news or reports will also impact on the behavior of this stock. So this is all for these three stocks of today's episode. We will come to another stocks in next episodes. Please do not forget to subscribe to our channel. This way you will not miss our new videos and new interesting discussions for US-based stocks.